And just a moment on an issue that I have been pursuing for some time. You're right, it was in March of 2007, I think it was Secretary Paulson who was sitting here, and I said, you know, I think we're going to have a tsunami of foreclosures, and I remember the responses. I think that's an exaggeration. I wish she had been right and I had been wrong. The reality is that we ended up with, we haven't even seen fully the crest of that tsunami even yet. And what I am concerned about is not just for all of those families who clearly under a life-changing set of circumstances where their home will be taken away from them, but it's even for the greater risk to everyone in a community that faces the consequences of multiple foreclosures in their neighborhood, the loss of property values, the loss of ratables, and all of the consequences that flow from that. And so I appreciate that 18 of my colleagues signed with me a letter to the Treasury Secretary. One is about the whole issue you've discussed, is about the robo-signings, the rubber stamping of foreclosures by banks that exercise lack oversight. It's not certainly only shocking, but it's one example of how banks have mishandled both foreclosures and mortgage modification requests. And if the robo-signing is directly attributable to banks not doing proper due diligence, which is inexcusable when dealing with a matter as monumental as taking someone's home away, I think the more important point might very well be that banks and servicers are not handling even basic foreclosure procedures correctly. It's that they're also not correctly evaluating homeowners for mortgage modifications. I have serious concerns about that process. I have listened to constituents time and time again who talk to me about the horror still today, even after this committee has raised these issues time and time again, of the process that they have gone through. I'm concerned that despite the best efforts of the HAMP program, which estimated that 7 to 9 million families could restructure or refinance their homes, that we've only had since January of 2010 about 495,000. That doesn't seem to be working in a way that we wanted to. And finally, you know, countless constituents have told us stories of being stonewalled by banks for very long periods of time, of not being told the reasons for their rejection of their modification requests, of significant delays caused by banks losing their paperwork, and trial modifications canceled with no rationale. And that just can continue to happen, Mr. Chairman. So I appreciate that you're having this hearing today and the work the committee will continue to do.
Senator Menendez.
Thank you, Mr. Chairman. You know, Ms. Caldwell, I mentioned in my opening statement that 17 of my colleagues joined with me in a letter to the Secretary. And it's our concern about HAMP. We're concerned about the servicers and the banks, and I'll get to that in a minute, but we're also concerned about HAMP, which was originally projected to take care of 7 to 9 million homeowners. It's fallen far short with about $495,000 permanent modifications since January of 2009. At the same time, in 2010, we're estimating that there's going to be about 3.5 million homeowners who will receive foreclosure notices, and less than 2% of the funds allocated for HAMP have been expended. Now, something's wrong with that. And we sent a letter that outlines a series of actions that can be done not with congressional approval, simply administratively by the Secretary, including a process of holding servicers accountable. Treasury offers incentives for their participation, but no disincentive or no consequence for mistakes. You know, the issue of the Office of Homeowner Advocate, the issue of automatic conversions if you have a successful trial modification, the issue of revised eligibility requirements, the documenting of investor-based modification denials, the release of net present value analysis. Why can't we get that done by Treasury?
Well, I heard a lot of suggestions there. Let me just first talk in general about the program. You know, I think it's important to remember that when we started the program, 18 months ago, folks said servicers will never sign up for a voluntary program. It went from 0 to over 100 servicers signed up. Then it was, we'll never get homeowners in the program. and we set a goal of getting 500,000 homeowners and trial modifications by November. We hit that. Then we reached the conversion challenge, and at the beginning of 2010, we had about 31,000 permanent modifications and a backlog of close to 700,000 trials. And folks said they won't convert. We've gone in the first 3 quarters of this year from 31,000 modifications to over 500,000. And what we do know about those modifications is that they are affordable to the homeowner, and based on the OCC OTS metrics, they perform better than historical modifications. So while we certainly haven't hit the numbers we want and continue to focus on outreach efforts to homeowners through our call centers, through our events, what we do know is that those homeowners that are in HAMP have affordable and sustainable modifications that have used taxpayer resources wisely. But we continue to focus our efforts on outreach, absolutely.
Well, I appreciate your defense of the program. I don't quite see it the way you see it. I don't think many members see it the way you see it in terms of what our goals are and what the accomplishments are. And so I hope that we will get a response from Treasury towards these 6, 7 items that can be done internally, administratively, and many of us, including many of us on this committee, think that, in fact, would transform that into a much better, more successful program. So we'd like to get a response from Treasury on it. Mr. Torello, a couple of weeks ago, your colleague on the Federal Reserve Board, Sarah Bloom Raskin, said that the numerous procedural flaws that have been unearthed are, quote, part of a deeper systemic problem, and that as long as the business incentives for bank and loan servicers run counter to the interest of homeowners, there is a need, this is her words, a need for close regulatory scrutiny of these issues and for appropriate enforcement action that addresses them. Now, to me, that makes a lot of sense. And as long as the servicers are incentivized to quickly push foreclosures through, they will ignore, I think, very often the ordinary homeowner's needs and the accompanying deadweight cost of foreclosures. How do we get those incentives somehow realigned? How do we, what steps should banks and regulators such as the Fed take, if any?
Well, I think, this gets back, Senator, to my point about the need for a combined or generally applicable set of standards, which are going to apply to servicers whether or not they're an insured depository institution, an affiliate of an insured depository institution, or completely independent. I mean, I do think that with respect to fair treatment of homeowners, with respect to the relationship, the way in which a servicer deals with conflicts it may have as between one lien holder and another, with respect to the relationship between the servicer and the investors in a securitized mortgage, the system as it is now was simply not developed with the prospect of a large number of foreclosures and troubled loans in mind. So I think that while you see problems across the board, you generally think you're going to need more of an across-the-board approach. And that's why I said in my testimony and will repeat here, I think we do need more of a national effort to impose standards on everybody. We can do things as we are. I mean, with respect to one of our institutions where even partway through the examination we just see a lot of problems, we're pushing them to change now. We don't need to wait for the end of the examination. But that kind of step-by-step process, one institution by one institution, specific issues here, I don't think gets to the larger points that you and Senator Corker and others have been raising.
Mm-hmm. Mr. Chairman, I have one final. Mr. DeMarco, both Freddie and Fannie are participants in the second loan modification program, which helps a lot of homeowners who are struggling with multiple mortgages. And servicers are supposed to implement this program by January of this coming year. But given the stories we've heard from homeowners and consumer advocates about servicers' reluctance to engage in second loan modifications, let alone the first loan modifications, I'm concerned about how the implementation of this program is going. What rules are in place for ensuring that servicers are knowledgeable about the second lien modification program, that they actually participate, and how does your agency plan to oversee this program to ensure that servicers are in compliance?
So, Senator, first, the second lien program you're talking about is a part of the HAMP program, so that's administered by the Treasury Department. It's a Treasury program. But to the general point, and this goes back to some comments that were made just a few minutes ago in response to a question by Senator Corker, the existence of second liens has been very problematic for us in overseeing the enterprises and their loss mitigation activities with respect to first liens. And it is really quite a turning things upside down to find situations, and this is rather common, where borrowers are continuing to pay on their second mortgage and they're not paying on their first mortgage. But the property rights here actually run first to the first lien holder. And this has been a true conundrum in this whole loan modification and loss mitigation effort that we've all been engaged in, is to figure out you know, that the way this ought to work is that the second lien holder ought to be taking the first credit loss here, and yet we are continuing to do loan modifications on first liens that basically provide protection to second liens. And so I would share the comments of my colleagues that as we think about our housing finance system going forward, I think that this is an area that clearly needs addressing. But as we go along right now with second lien with loan modifications, yes, it is very much our expectation as a conservator of Fannie and Freddie that the second lien holders be participants in providing relief to a troubled homeowner. If the first mortgage holder is going to provide relief through a reduced payment, an affordable payment, we certainly think that the second lien holder ought to be sharing in that.
Thank you, Senator, very much.